All right, everybody. Well, hey, hope everybody's doing good this Monday evening for the Monday Note. Glad to have you guys on the call. Hey, Marlene, glad to have you back stateside there. Hope everything's going well with your mother. Anyway, everybody, we are rocking and rolling along here. If you got your webcam, I think you can see me here. Hello, hello, hello. We're here live in Austin, Texas on a Monday evening. It's been raining all day here for the most part, but rocking and rolling along here. So just excited. This is a topic that we'll be covering today that probably a phone call a day on. Hey, how do you structure things? How do you do this? How do you do that? And so you're going to make sure if you don't have a pen and paper to grab one. It's definitely going to be a lot of information for you here. This is being recorded. Will be uploaded as well as always. Great, Caesar. Glad to have you on that. Definitely. We'll cover that in a second here. So anyway, so we dive into the Monday Note here, everybody. We're glad to have you here. We try to have one of these every week. Sometimes they are pre-recorded, depends on our schedule. Other times they're live like today. Sometimes it's just pure content. Sometimes we'll bring on a speaker who's providing a service of some sort, give you an opportunity to learn a little bit from them. And if you want to sign up for their product, you're more than welcome to. I highly recommend that you guys, though, if you have not done this already, connect with me. The different social media websites. If you don't have those social media websites, you're actually kind of doing yourself a disservice. We raise a lot of capital. We raise do a lot of deals that we do off of social media. As always, I have my goals here for 2015. I'd like to share every week with you guys. 1,000. I want to close 1,000 deals, which we are well on our way doing. And then I also want to teach 1,000 people how to buy and sell non-performing notes, whether it's through one of our workshops or speaking engagements. Some of the other things we're doing, we definitely want to help a lot of people. We believe if we help 1,000 people closing their first asset, it'll lead not only to us closing on 1,000 assets, but it'll actually lead to a lot bigger things. Also, there are different groups out there that you want to join. That we have a special group called the Note Closers Group. Excited about that. Let me make sure you guys are hearing me okay. Great. How's the audio? How's the sound? I got a brand new mic here. Want to make sure it's sounding good. You guys hear me okay? Excellent. All right, good. Good. Anyway, so I know it does. It is a big freaking mic, isn't it? It's a Yeti thing here. I had to take it from a buddy of Chase Thompson, who carries one around with these, but I now understand why he carries one of them. So as we do this on a regular basis, figure we might want to invest a little bit versus just the freaking headset microphone. So anyway, for those that are interested, if you go to LinkedIn and you search under the groups under Note Closers Group, there's a online resource there for you guys to log in, share, comment. If you have deals, feel free to post them. If you're looking for joint venture partnerships, that's another one in there as well. Please avoid any pitching or salesy. That's definitely something we don't want there. Okay. All right. Also, if you post something on there and you're doing something illegal or not treating people properly, don't be surprised if you get a phone call from me to kick you out. Okay, because I'll do that. Glad to. All right. Actually, this last Friday we had our first Extreme Makeover Note Edition. It was a lot of fun. It's hard to believe it was just 4 days ago. Time flies when you have fun. Had a really good turnout here. For those that don't know about it, it's literally, we've got one seat left here for the next upcoming June 19th. It is $9.97 per person. What we encompass with that, we spend all day here at our offices. We close notes here in Austin, Texas. Spend all day with us, basically, 9 to 5. That's our offices there, not the whole thing, but anyway, nice to start them. We allow a maximum of 8 investors to attend a given point. That also includes staff here. So if you, if you're like Steph is here, so that leaves 6 spots available for people to attend. We spend in a conference room. That's the actual conference room we spend in most of the time. We spend it working through what your struggles are, what are your biggest hurdles, what are your biggest gaps. This last week we spent a lot of time kind of restructuring. Okay, what's the deal flow? How does it work? And then we went through some deals, and at the end we actually broke down a tape that several of the people that are attending are making offers on. It's totally focused on your needs. What are you struggling? What do you need most amount of help with? And then we also have dinner at the Oasis, which is a lot of fun right there on Lake Travis. And actually, that's an old photo, but here's a current photo from us from the other night, and you can see the lake was actually pretty full. We've since gotten more rain since yesterday, and today it's been raining, so it's gonna be even fuller. But it was a good group, a small group of us, 7 of us out there having dinner. It's literally focused on just putting you guys in the right spots. All right, give me 1 second here. I want to make sure. There we go. There, it's better. So I can see you guys if you have any questions. If you have any questions about that, feel free to let me know. Our next upcoming workshop is actually not this coming weekend, but next weekend in Houston, Texas, the 25th to the 28th, at the DoubleTree by Hilton Greenway Plaza Hotel. We're excited about that. It'll be a full classroom. We've got a few seats left available for it. It's $9.99. That's good for you and a spouse. If you are past or present military, we do comp you in. We'll go running from 9 to 5 each day. Sunday, we will wrap up on the 28th about 3 o'clock so that those guys and gals that have flown in can catch a flight out. We will have a networking cocktail party Thursday from 5 to 7. As I say, it's $9.99, 2 for 1. You can register for that at WeCloseNotes.com. And there's a picture of the hotel right off the highway. Literally, it's like 6 exits down from Minute Maid Park 2. So I think the Yankees are coming to town. They are coming to town Thursday and Friday night. So if you're a baseball fan, Saturday, Sunday? Thursday through Sunday, and then the Royals come Monday and Tuesday. There we go. A baseball aficionado there, Stephanie. Yankees and Royals, oh my, for the hottest team in baseball, the Houston Astros. Don't believe anybody would have believed that if we said that last year. So, no, Marlene, we will do one in Baltimore. Just with everything that happened in Baltimore, we're bumping Baltimore to August. And then we'll be doing a workshop in New York, New Jersey in October. Just don't have the dates actually for the Baltimore workshop is, hang on here, I got it up here, is August 21st, 22nd, and 23rd. New Jersey, New York, don't have a date yet for that. We're working on hotel locations right now. So just with everything happened with Baltimore, we decided best to go ahead and probably bump it and just bump Houston up. So that's what we did. So great. One thing that's we've had quite a few people actually opt into is my 30-day note training. Actually had a lot of positive comments. We wrapped up the 7-day intro to it this morning, and the first day rolled out this afternoon. It's literally helping you build some daily habits. A lot of people really enjoyed the videos that we sent out. It's literally an email with a video of me talking, going through short videos, nothing long. It's just designed to kind of help you build your mindset right and kind of start thinking properly. Help you build some daily habits. Actually, I'm sorry, I should have removed that. That 7-day kicked off last week. We kicked that off today. If you, for those that have signed up, I've been sending a link to day 1, but we're only taking signups till midnight tonight. After that, after midnight tonight, we won't be rolling it out any longer. It'll be closed for those that have signed up for it. You have email and online access to me like you would normally. One of the nice things is it is just $99. For those that have signed in and already been a part of it, you should have gotten an email link from Stephanie regarding our Basecamp file. So the people that signed up, you'll have a chance to communicate back and forth with people watching the same thing. So it's really kind of an interactive thing. It's what we do with our mastermind and mentoring students. They've got access to this Basecamp, so they ask questions, they post comments, people respond. It's really a great source, and we're rolling this out just for that people give a kind of a taste for it. But you may remember the Morgan Spurlock show 30 days that he did a few years ago. I think he still does it occasionally, but the one that kind of put him on the spot was the McDonald's 30 days and how he did quit it because he was actually killing himself. Well, our goal is at the end of 30 days, you'd be a lot better off and not dead like McDonald's, okay? Yeah, you probably did, Pat. It did go out this, it went on at noon today, actually. Give me 1 second here. Yeah, it went out at noon today. And we've had, here, give me 1 second. Yep, it went out at noon today. And on the, let's see here, the 30 some odd people, 28 people have subscribed. It actually is more than that. We've added more to it. Actually, it was 28 as of this morning subscribed to it. So it went out Yep. Noon Central Time for you, and you're on the list. So check your spam or junk folders. It may be in there. Okay. If not, I get you a link to it as well. But I know that you're on the list. I've seen your email on there. So okay. If you don't see it, Pat, just pull up there. Just let me know, and we'll get you re-added to it. But you should be involved with it. We added 7 new people in the last hour that signed up for it. So take it, huh? For the 30-day. Base camp? Yeah. Yep. Yeah. So you should have gotten a base camp. For those who have gotten a base camp in the first email out today on the 30 days. We've been sending out the normal 7-day thing for the 300 people that opted into that. So what should you focus on? Well, we'll help you with step-by-step video training. Let me just kind of run through this. 3 apps. Okay. We also have our online virtual workshop. We've been getting a lot of people that have asked about this too. That's kicking off July 31st through August 2nd. You can join us online. It's literally a Friday, Saturday, Sunday, 3 days, 9 to 5. It'll be similar to the workshop, but we'll be totally virtual. Live questions, live video, deal breakdown. You'll see guest speakers coming in with the live webinar. You can do it from your home, from your office, wherever you want to do it. It's $5.99 per person. It's not a 2-for-1 on that. It's $5.99 per person on that. Okay. The online replay will be available for home study access for you all, along with a manual. So we're excited about that. Once again, you can also sign up that for weekclosenotes.com. So sign up for the Houston, sign up for the virtual. You can also sign up for the Makeover Day on the 19th. We may be looking to the next Makeover Day is going to be bumped to August. So we were trying to do one in July, but the one Friday I've got available, I've got to fly out to Florida now for a foreclosure trial to show up as a witness to one of my foreclosures. So I'm excited about that. So let's dive into the content tonight here. Any questions before we dive in here, though? Oops, I spilled protein shake all over me again. Leaky hole. It's a hole in the bucket. Elijah. Chad just dropped me an email on that, and we'll get you taken care of. Okay. All right. All right. So let's define what a joint venture agreement is. A JV, a joint venture, is a business agreement in which the parties agree to develop for a finite time a new entity and new assets by contributing equity. They exercise control over the enterprise and consequently share revenue, expenses, and assets. Now, what a lot of people say is that, well, they contribute, contributing equity. Your equity doesn't have to be cash. It can be you working the aspect. It could be your expertise in the deal. It could be you bringing the deals to the table. All right. So keep that in mind, because a lot of people say, well, do I have to put money into a deal? I mean, you can. It's up to you. I've done that in the past. I haven't. All right. But one of the biggest things I want you to keep in mind is the deals you're looking at, if it's structured properly, you shouldn't have to put any money in the deal at all, as long as you work through the deal and understand the back end of the deal. And we'll go through some examples here. No, the online virtual, well, actually, yes. If you are a vet, let me know. We can get you comped into the virtual. It's a limited time only on that one. Okay. All right. So that's a JV defined on that one. Now, what's involved with a JV deal? Well, obviously, you got to figure out funding of the asset, funding of the deal. All right. Fees, you're going to have foreclosure costs, servicing, repairs, taxes a lot of time. You're also going to have to figure out what's involved with the workout. Who's going to do the workout? Are you going to outsource it? Who's going to manage the asset? Is it going to be you? It's going to be a professional service that does it for you. You also have to figure out what kind of exit strategies do we believe. What's our likelihood of this becoming a modification? What's the likelihood of this becoming an REO? What's the likelihood of becoming a rental? And if you're in note investing, if you deal with 10 assets, you're going to have a mixed bag of those things. 3 or 4 could be loan mods. 3 or 4 could be deed and lose. The rest you're going to have to foreclose on. And actually, the rest, those 4 to 6 that you end up foreclosing on, some of those could turn into mods or REOs along the way. If you get to, or deed in lieu as you work through the stretch. Like I'll give you an example right now. I've got a Cape Coral asset that I've got a JV partner on that we're starting to foreclosure, and suddenly, oh, they want to do a loan mod after they were ready to consent to judgment last week. And so it's just funny. I'm like, well, I'm not going to wait 5 months for you guys to make up your mind. You guys need to come to something in 30 days. You know, servicing company will respond as they do their job. I'm not going to let somebody sit there for 5 months and then I never respond. Okay. Some of the different exit strategies you have, you can do with note sales, you can do the REO, deed in lieu, modification, or turn into a rental. Those are what you're going to have happen most of the time. Okay. You obviously, the biggest thing about notes is that you turn toilet paper to cash. Or, I'm sorry. You make something happen about what has been, the bank has thought has been toilet paper. You actually see as cash here. You know, another man's junk is a man's treasure. That's what I love about the note business. You make things happen from things. Okay. So what else is going to be involved in your joint venture deal? Well, you could end up with a deal that looks really good online, and when you get a photo of it in person, somebody drives by it, it looks a little bit like this. Okay. You may have to travel out to the property to take a look at it. There's some costs involved with that. There may be junior liens involved. There's a second. Maybe there's some liens attached to the property from the city for not mowing the yard. Okay. Your utility bills may have to be paid. Not only to pay old ones, but maybe to turn the utilities back on. Okay. Lawn care, especially in some areas of the country. We're in rainy season right now. You got to have your lawn care taken care of, or you're going to start getting more liens from the city. Okay. If you've got to pay cash for keys, who's going to cover those costs along the way with the borrower? And cash for keys can vary from nothing all the way up to the most I've paid is 10 grand for cash for keys. You may also want to roll on some upfront management fees. Hint, hint, wink, wink. Things to put in your pocket to maybe cover some of these things along the way. All right. You'll also have to worry about banking. Are you going to need a banking account if it becomes a loan mod or the REO and turns into a rental? You know, both are going to be on the account. Or is one person going to be a signer on the account? Who's going to have access to that kind of stuff? Those are all things that are involved that you have to consider when you're talking with your joint venture partner. Now, this is very simple. It's very simply just a conversation. And most of the time, it falls in the same line. Hey, so-and-so is going to fund it. We're going to work it. So-and-so is going to fund this plus the expenses, and we're going to work it and split things up after we close out, where the investor gets their money back first. That's always the biggest thing you have to keep in mind, right? Joint venture agreements are not hard to write out. It'll be you and either a business partner or investor or their entity you're joint venturing with or their self-directed IRA. Now, the biggest thing is you want them to joint venture with your entity, not with you personally. That's one huge thing. Make sure it's not Scott Carson and Chad Raggio IRA. You want to make it be like Chad Raggio IRA if he's funding the deal, and then Inverse Investments or Inverse Asset Fund or PETA Incorporated, whatever your entity might be. Okay. You're going to have other expenses along the way that you may not think about. All right. Waste removal fees. God, what's some of the weird ones we've had? I've had sod ripped out and repoed where I had to put more landscaping down. All right. Other things. Some other pitfalls that a lot of people don't think about. You got to have insurance on your properties. Maybe if you're buying a portfolio, you've got to keep that in mind. You want to avoid the acts of God. Last thing you want is like a hurricane or Katrina or a thunderstorm come through and wipe you out. You need to have your property insurance on your assets. What happens if the investor needs their money back? Do you charge a penalty if they pull it out before the deal's done? I think you do. If somebody's investing long-term in a CD, they're going to definitely have penalties involved with that. So it's something you need to keep in mind in your thing. Time frame. Is it a 6-month? Is it a 12-month? Is it a 2-year? Is it a 3-year? Okay. Is there going to be a refinance clause? If after 12 months if the deal drags on past the period of time, will you get them refinanced out? And what's involved with that? Do they have 30 days, 60 days, 90 days? Do they have to give you that time frame? Is there a return that you give them to refinance them out? Most important thing about joint ventures is you manage expectations. You've got to talk with people to see what they expect and work to manage those. That's probably the most important thing. Most people are what's the word I'm saying here? I'm trying to say, friendly, cordial enough to realize they want to meet somewhere in the middle. Okay. Some people have the money, other people have the time. Some people, they rather buy time by writing a check. They don't want to do all the work. They'd rather, hey, just give me a return. And if that's the case, you have different ways of being able to negotiate your deals to still give somebody a good ROI, return on investment. You just, and you still put money in your pocket on the front end, back end, in the middle if you need to. All right. What's this? Okay. You want to also figure, are you doing equity splits, or is it a flat percentage that a borrower's looking for? Some people just want, hey, I'll give you money for a year. Just give me 12% at the end of the year. Or, hey, I don't want to receive payments, but I want to get half the profits on the deal. That's what I want. I want to make a higher return. I don't want to be active, but I want to make some money on it. Okay. So you keep in mind things are going to happen. I put this Fort Myers picture up here because it's fallen in. This is an asset I've had, sold it off a while back, but bought it. We had a partner come in and fund a deal. They were all gung-ho to be in it for 12 months. Well, literally about 6 months into the deal, they're like, I put the money on a credit card is what I pulled it. I pulled it off a credit card. I'm getting tagged $700 a month. I need to get my money back. And they got really ugly. I'm like, well, that's not my fault that you did something stupid. But I didn't have an early withdrawal penalty in my actual joint venture agreement. So I refinanced them out, paid them a flat return on it, even though they screwed up on their time frame. I told them the deal was to take 12 months. Okay. They want to do an equity split, not a flat rate return. That's fine. But what happens is my expectations weren't the same as theirs. They were thinking we do this quickly, and I had to manage it. Like, no, it's not going to be 6 months. It's going to be 12 months, as it says. Read the joint venture agreement. It outlines very specifically what the time frame is for. So I put this in here so you guys realize, hey, everybody makes mistakes. You're going to do this as many times as you want to do it. You're going to make mistakes. Okay. Okay. So let's go. Communication is very key with your joint venture partners. You got to know, let them know what the heck is going on. The more communication, the better. The less communication, you're going to have joint venture partners start to get, hey, what's taking so long? What's taking 3 months? Why is it taking 6 months? I need to have some sort of communication going on. So the best way we found is we copy them on emails. We give them actually online access to servicing sometimes, just depends on the situation. We provide monthly updates. Here's where you are on your asset. Now, some of them don't want it once a month. Some are like, what you don't want to do is be given stuff every month, all right, or every week. Once a month is fine. Hey, here's where we are. Here's where we're going. Okay. One of the things that helps with people is actually we oftentimes will use a Basecamp, a Dropbox, or some sort of file sharing service. And then as we get expenses or let notices in, we'll drop them into it, and it automatically alerts the people, our joint venture partners, what's going on. They see that kind of stuff. They like it. Photos. We provide photos. Hey, we drove by the asset. Here's where we're at. Here's what the asset looks like. That's something to keep in mind. All right. We like to visit, or we have somebody drive by and visit the asset. That's critical. Especially if you're doing it once every 90 to every 6 months. You got to, especially if you have a portfolio of things that you're working through. Don't get me wrong, most of the time, I'll give you an example. I've got a property right now. The lawn care guy goes by. He takes a photo of every time and then sends me a picture of it as he texts it to me. And it's perfect. That's all I need. I'll forward it on to my joint venture partner. Okay. The thing is, we give constant communication in a variety of ways. Some people want a phone call. Some people want an email. Somebody just want something to pop up. They see things are being worked. Sometimes it's a text. Hey, we're working on this. This is the status. Doesn't have to be difficult. But usually what's great is the more communication you have with your joint venture partners, the more likely they are to bring more money to the table for you. Okay. Here's another asset we're working through right now. It's gone from being a foreclosure to being an REO. We got to do a little bit of modification, not a little modification to it, but a little upgrade to it. Great little property, West Palm Beach, Florida. Decent little rental. Just got to do a little bit of work on it. Okay. So what if it goes wrong? You're going to have this happen some. If your BPOs are way off, you find out that the value of the asset isn't 60, it's 40. All right. What if not only the values drop, but you got vandals in an area that have gone through and trashed it out? Okay. Your loan mod that you started off with now turns into an REO sale. The borrower was expecting, your joint venture partner was expecting a cash flow the way. Now it's going to be a while before they see any type of cash flow. Money costs start to escalate. As I talked about earlier about, hey, you never know what their money's costing them. Oh, hey, I got to put this money back before 12 months, or I've got to. You got to know this kind of things, and it's best talking with your investors. Time drags on is one of I think the most frustrating things. We do a lot of stuff in Florida. All right, do a lot of stuff in Florida. I love Florida, make a lot of money on Florida deals, but that's one of the longer foreclosure states, 12 plus months. I'm not investing in New York, New Jersey most part because that's a lot longer. But I definitely stress to my investors, hey, it's going to be a 12-month process or longer on these deals. So keep that in mind. I may try to leverage them, one fast-paced deal and one shorter-paced deal. All right, one short time and one a little bit longer. Maybe one's in North Carolina, one's in Florida. So we got something working as we're going. All right. If things drag on, expect just to communicate that. You'll have delays. I had one asset was delayed 3 times because of the freaking attorney. So I had to fly to Florida 3 times, and it was a 90 delay in between. Most importantly, if you find out something's wrong, you just do what's right. Okay. If it means you're not making any money on a deal to make sure your investors paid back, do it. I've had one deal where we put an investor in, and then we pulled values 60 days later, and the values had dropped dramatically. So I picked up the phone, called my joint venture partner, and said, "Listen, I don't want you in this deal. It's not looking good. Let me pull your money out of this deal and put you in another one I've got free and clear." All right, and he was like, "Really? You were willing to do that?" I'm like, "Yeah, sure. I want you to be happy. I've got some flexibility in my portfolio where I don't have anybody on this deal. It's a pool that I bought. Let me transfer you in." That's what people think about this business, everybody. If you start going bigger, you're going to have a lot more flexibility that you're able to take care of your investors that way. Okay. Swapping assets is not a bad thing when it needs to be done. Okay. Swapping assets may also be said, listen, I've got another one. I'm going to give you my portion of that deal, my half of the deal, and I'm not going to take anything on it. I'm still going to manage it to walk you through, but because I want to make you whole. Okay. This is a great example. This one here in West Palm Beach, Florida. It was a loan mod. It turned into a deed in lieu. Cute little property, obviously. I drove by this photo and took the photo. We're getting ready to close on it, and bam enough, vandals come in and vandalize the back of the water heater, the air conditioning. It wasn't an $80,000 deal. It was a $40,000 deal. So it's like, well, I'm going to step up and do it. I'm not going to go back to the investor to do it, to borrow more money from it. We're going to literally write the checks, get this stuff done, so we get the house sold and move on. In some cases, I'll eat expenses. Like, well, I want to make sure you have a good ROI. Do I have the right to go ahead and take $7,000 out of the expenses? Sure, I could. I'm still making a lot of money. I still want my investor to be happy. Especially if the longer a deal drags on, expect to start having some expenses you cover out of pocket. Okay. So what we have right now that I want to go through is a couple deal examples for you guys to kind of see. But before I do that, do you guys have any questions that you'd like to talk about before we start diving into numbers? All right, got a couple questions here. Where do you find a joint venture form? You gotta have to go do it yourself. You're gonna have to write something up. Simply going back and forth. I don't provide my copy of my joint venture agreement. It's something sitting down and talk with your investors about. All right. And you go through the different things we just covered. Hey, what if this happens? What if this happens? What if this happens? That's all a JV agreement. You're responsible for this. This is what I'm responsible for. Okay. Okay. Let me go see here. Do you need a securities attorney to do a JV? No, you don't need a securities attorney to do a joint venture. You're going to only be partnering with one person, okay, or one entity, okay? You don't want to go pool somebody's money. That's not a good thing. You want to go and deal with one person, or one entity. You partnering with somebody who's partnering with your LLC is partnering with them or their self-directed IRA. You're not partnering with 2, 3, 4 people. That's not a good thing. No, you don't have to have different JV agreements for different states. Okay. Honda for unexpected expenses. You're going to know that when you start looking at the asset. If it's an ugly asset, expect some repair costs. Maybe you add in $5,000. But if you start having realtors drive by and it's in good condition, maybe you just put aside for servicing and foreclosure costs, which I'll cover in a second. Okay. Richard, we can talk about that offline if you want to drop me an email regarding that, Richard Gee. How long do I have to wait before I get my first deal? Well, you probably need to come to a workshop first so you know what the heck you're doing before you just start buying deals. I see so many people that they go out and buy a deal and they don't understand it, and they either pay too much or they lose money right off the bat because they didn't know what the heck they were doing. Marlene asks, so it sounds like it's wise to have a deal reserve of your own for extra expenses. I think it's a good thing to have reserves no matter what you have going on. As they talk about as a financial advisor, we should always tell people to have 6 months reserves sitting on the side before they started investing. All right. And I'm going to go through a couple of examples here. You can pull a little bit of cash out in the front end and still give the investor a good thing in the back end, because we're all worried about making money, right, everybody? Hey, how do I make money? But I got to make money now. I don't want to, just wait 6 months, 12 months before I make any money. A lot of investors struggle with the idea of, well, I need to make some money, so I'm just going to wholesale the deal. And that's not what you want. You want to stay involved in the deal, and depending on how savvy you are in discussing the deal or breaking down the deal, it'll help you with your money on the back end. Okay. All right. So let's go through this first sample. It's a first lien of $82,000. Their monthly payment is $700 a month. CMV of $52,000. Means that's exactly current market value of $52K. You can buy the note at $13K. Not bad, right? $3K in taxes. It's owner occupied. It's in good condition. 1 year to foreclose. It's in Florida, I'll just tell you that. And the market rent rate is $600 a month. Now, normally on a $52,000 value, you're probably going to pay somewhere around $25,000 for the deal. But if it's start of new foreclosures, maybe you pay less than that. So I'm just going through the numbers. This is an actual deal we just finished working on today. Okay. There's a picture of the property. It's a small little house, 3-bedroom, or 2-bedroom, 1.5 bath. That's the reason it's less than usually $25K. But it's owner occupied. The borrower's been sitting outside there. We took this picture off online, and then the realtor drove by and gave us a good photo of it. So here's an example. Okay, so it's all about structuring the deal. Well, your expenses. Obviously, you've got a $13K cost. You're going to have to pay those taxes because it's probably the borrower's not going to have $3,000 to pay the taxes. You're going to have $1,000 in servicing costs. And to foreclose, you're going to have somewhere around $4K. Now, what I like to do is I'll say $1,000 for servicings on my notes and somewhere around $3,000, $3,500 for foreclosure costs. But since this is Florida and still a year to foreclose, that's why I threw $4K in there. So your total costs are $21,000 on the front end right now. Potential. Obviously, you get a deed in lieu or a mod, you're going to not have to spend as much on the $4K. But let's just say you've got to look at that route. All right. Right now, that $21K on the 52 is $40,000 investment to value. 40% investment to value. Not 50%, but 40%. Okay. So let's say it goes the route of an REO. 52K sales price. You're going to sell it and say you've paid the taxes, but you've got to pay your realtor's commissions and closing costs. So you're going to end up netting 90 at closing. It's $46,800 is what you end up netting at closing. Okay. You have to say 21K in costs, 25,800 in net profits because you take the 21 in costs from the 46, get 25.8. Now, if you've got an equity partner and wants a 50-50 split, that's $12,900 to each of you. Okay. And that equates to a 61% ROI to your investor. They made $12,000 on their $21,000 investment. Is that a pretty good deal? It's okay to respond. Who wouldn't be thrilled with $61,000 or 61% ROI, right? Okay. A rocket deal. Yeah, it totally is. Hell yes, as Bill says. Okay. All day long. That's right. All day long. Back to back. It's funny. Yeah, who would want to do that all day long? Now, the thing to keep in mind on that is this. Do you have room in this deal on the front end to add to hit your HIP National Bank? Yes or no, everybody? If you needed to take a bit of a management fee on the front end, you could do that, right? Of course you can. So let's look through that. So let's say you take a 5,000 management fee, okay? 5,000 management fee. So let's run the numbers on the back end. 52K, fair market value, 21K initially in costs. You add a 5K management fee to the deal, then you're in at 26, right? It could be a couple of things. It could be a broker fee, it could be a management fee. You could just say, hey, we were going to fund this at 18, not 13, however you want to structure it. You're now at 50% investment of value because you're at 26K on a 52K investment. So you're at half investment into value now. 52K sales price, net 98 closing, it's 46.8. 26 now in cost versus 21. That's 20,800 in net profits. You split that 50-50, 10,400 to each of you. That's still a 40% ROI to JV. Now, for everybody that said they love that 61% deal, would you all agree that 40% is still a good ROI? Totally. Would you be, you have no problem making sure that somebody is managing the deal, making money along the way for working the deal. Okay? Well, we just got a bunch of yeses on that one. You guys are saying yes faster than I can freaking delete your comments here. All right, hang on here. Yeah, of course you would. 40% is still a great day. Now, the big thing to think about it is when you're structuring this deal, the person, your investor, your joint venture partner, they have no clue the route it's going to go. It's how you structure the deal. Does this deal make sense? Of course it makes sense either way you work it. Okay? But what happens most of the time is we don't ask for it. We just don't say, hey, here's what we're getting. This is involved in the fee. 5,000 management fee. That's my cost for acquisition, for helping find the deal and to work it along the way. Okay? And with that $5,000, I may cover some of the expenses that pop up from time to time versus going back to you for more. No, Alan, I would collect them up front. I collected $5,000 on the front end. You know? Now, you'd have Richard Gordon Gecko telling you buy all day long, and just like you all did. You all were like going, buy, yes, 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 all day long, and on Sunday too, all week long, okay? But what happens is a lot of people just don't ask for it. Question here. So is the management fee put in a clause on the JV agreement? No, we just put it on there as a line item. Hey, here's 13K plus 5K. Here's my purchase. The joint partner agrees to fund the deal at 18K. So it's how you structure the deal. Hey, you're going to fund this at 18K. Plus these expenses, we're going to be at 25. Okay? Maybe you only have them fund the acquisition price plus your fee on the front end, and maybe you cover the costs along the way. Or say, hey, we're going to have probably roughly these costs along the way. It's however you structure it. Okay? Question here. What percentage of your deals do you give 12% ROI versus splitting profits? It all depends on what the investor wants. If I'm dealing with savvy investors, they're probably not going to want 12%. I deal with a lot of people, though, that have IRAs are looking for things, and they'd be glad to make 12%. They don't want just give me something every quarter. I'm like, oh, fine, I'll use your money and invest it and go from there. Okay? So things you got to be careful about here. You might want to put some of that 5K away. All right? You may not want to go use it all, but put some of it away. You may want to cover small expenses, changing the locks, getting the lawn mowed, that kind of stuff. Maybe have a little bit extra for cash or keys. It's hard to go back to the bank for more if your leverage the higher your investment is. So if you're at 50% or greater, it's harder to go back to the bank to get that unless you've structured that in the front end. Hey, joint venture partner agrees to cover this along the way while we handle this. Okay. But you don't get what you don't ask for. If you never asked for the 5K, don't do it. If somebody says, "Well, I'm not willing to pay that 5K," great. I'm not willing to put you in a deal. If you're going to sit here and just want to do the deal, and me will do all the work along the front end and not make any money in the back end, I'll move on to somebody else. And a lot of us are like, "Ooh, I'm scared. I don't want to ask anybody else. I have somebody who's interested in investing with me, but I'm going to change my business model to do exactly what they want," and that's bullshit. Don't change your investment model and your business plan based on somebody else. There's plenty of investors out there for you to find. Okay. It just is exactly, Marlene. Don't ask the negotiators, "Hey, here's the fee." It's my fee. That's my upfront fee. It takes me time to reach out to people. It takes time and money for me to track these deals down for you. Okay. Heck, charge yourself a broker fee. Say, "Hey, there's a $5,000 fee to ABC LLC." Who's ABC LLC? Oh, they're a broker. Oh, okay, great. They don't need to know that ABC 123 LLC is you. That's one thing I did learn from Lee Arnold back in the day. He would always charge himself broker fees. I'm like, "Why are you doing that?" Because that goes to a different entity. I'm like, "Oh, that's brilliant. A little shady, but brilliant. I get it. Okay." It's another revenue stream. A retainer fee. I wouldn't call it a retainer fee. But I'll take that back. I haven't heard people say that. I just say it's a management fee. What's the difference between 40 and 60% in those two examples, everybody? What's the real difference in that? You want to take a guess? It's not a 50% increase, although it is to the JV partner. It's literally, the difference is you asked for 5K. An investor is not going to give a rat's ass. Anything they see over 40, they're going to be happy about. But the difference is whether you ask for it or you don't. You get that free dessert or you don't get the free dessert. I wouldn't put a finder's fee on it. That's too much of a broker's thing. It's too much of a bird dog fee. An acquisition fee possibly, but a management fee. Yeah, Stu talks about acquisition fees. You can do that. Whatever. You want to stable it. Okay, or label it. All right. Yeah, you might due diligence fee. That's a good point, Bob. Hey, you got to pull BPOs. You've got to pull O&Es. Those are some things you cover along on the front end. Yeah, at 50. Well, Stephen, 1,500 may not be a bad number because the fact is you may not be getting this at 13 cents on the dollar, 13K. You may be paying it 20K. So that's why you got to know what your numbers are. But if the deal will hold a 5K acquisition fee or management fee or bird dog fee, whatever you want to call it, why not get it? Why not? Okay. So let's go a different route. Let's say this doesn't become an REO, it becomes more of a modification. Okay. And you got a 13K purchase price, 3K in taxes. The taxes still got to be paid. You're still gonna have 1,000 in servicing, but maybe you don't have the 4K or 3K in foreclosure costs because your servicing would drop down to $30 a month once it becomes a modification. So your $500 fee cost to do a deed in lieu, to negotiate a mod, it gets sucked into the servicing side. Okay, so now you're gonna have a $600 a month modification. Now remember, the existing payment was $700 a month, but rent rates was $600. So to keep it a mod, you're gonna need to drop it down to at least market rents. Okay. So if you're doing this for 12 months, 600 times 12 is 7,200 in cash flow on a 17,000 investment based on this. That's a 42.3% ROI. Now the reason I'm showing you this is because if you can get a modification, you'll get that faster than you will a foreclosure REO. Okay. So keep that in mind because the two differences can change dramatically. Okay. If you did it on a 25K investment where you borrowed 25, you went in and added 8K into the deal. All right. You put in 8K in management fees. 7,200 on a cash flow on a $25,000 investment. So it's still a 28.8% ROI. Not shabby, right, everybody? Okay. That's just basically, hey, your investor's getting the full amount. Now on this, maybe you split the cash flow. Okay, tell you what, we're gonna split the cash flow. I'm gonna give you 14%, or I'm gonna give you 21% on this. Okay, you have to look at that. That's cash flow along the way. Maybe you only bump up to 20, or what's in the middle of 21,000, and it's bringing in at 35%. Okay, you have to keep that in mind. The way you compare this a lot of times too is you look at what a 12% investment would be. 12% investment on a 25K. 12% return on 25K investment, that equals a $250 per month. So you say somebody, hey, I'm gonna give you a 12% modified loan. Hey, you're still netting that $350 a month. If they gave you 25K, you could put $8,000 in your pocket on the front end and still be netting $350 a month in cash flow along the way. Now, if you keep that for a long term, great. But I guarantee if you've got somebody who's looking for 12% return and you give it to them, they're going to want to keep that money in there longer than you will probably want to, which is fine. But after a year, then you could, you sell the loan as a performing note at 80% of fair market value and get cash in that, and get their money back to them, and rock and roll. Does management fee cover legal related to foreclosure? No. Remember we talked about legal and foreclosure costs. No, it does not, Kevin. It does not. We covered that in the very front end. So, hey, you're going to have 1,000 servicing, $3,000 to $4,000 in foreclosure costs. Okay. Any questions? Henry asked the question, does the 4K and foreclosure cost cover the possible eviction costs? It can. You guys are asking specific questions about that. It could for 500. It could not. It depends on the state you're in. If you're doing stuff in Texas, I wouldn't put $4,000 foreclosure costs. I'd say 1,000. Okay. Okay, going back. 7,200 is it split with a JV? Yeah, you could split that with a JV if you wanted to, or you just take the $8,000 in the front end and keep a percentage of it. What if your costs are less than anticipated? Do you give them some money back? Well, that's up to you, Eric. If they funded it and they're happy on their return on 17K and it only costs you $1,000, why not keep the extra 3K? And you're giving a 40% yield. Why would you want to give that money back? Just go ahead and keep it is what I would do. Hey, keep it because trust me, you're going to need that cushion at some point later on another deal. Maybe it goes a little bit longer than that. So that's why you structure these things this way so that your joint ventures, hey, you've got some money coming in. You're good. You're sitting good. Just don't spend it all. That's fine, Eric. Are these deals abundant and common in Florida? Yeah, I find a lot of stuff in Florida like this that would do because we buy in bulk. We buy stuff and it's appreciated quite a bit from what we originally bought it in the last 3 or 6 months. But I got deals in North Carolina. I've got deals all across the country that we see at. I mean, just every market's got its opportunities, everybody. I would just stay away from probably first off, I probably would stay shorter foreclosure states, 9 months or less. I wouldn't probably spend stuff in a lot of time in Florida because of the fact it's a longer foreclosure time frame. Okay. I've had foreclosure costs in Florida be $1,000 all the way up to $16,000. Exactly. Yeah, Marlene. Most of the investors are happy about getting a high return. They don't care about nickel and diming you. Okay. If people start to nickel and dime you, move on to somebody else. Say, look, I don't want to deal with it because there'll be a pain in the ass along the way. Yeah, Gene, you're going to need to use the title search and O&E to help check out liens on the properties. Yeah. Now, the most important thing on this is using you start thinking about people that have IRAs. Think about that. If somebody's looking for 12% and you've got something that's performing, could you not refinance an investor out and put them into something that's yielding this difference? They're making $250 a month, and you're making $350 a month, plus you pulled another $8,000. That's a good ROI for you. Because let's say you use your money on this deal, $17,000 is what you've paid for to begin with, and you get it modified. Okay, well, hey, you can make a 42.3% return just sticking in the deal if you don't have a JV partner. But let's say you bring in another investor who wants to make 12%, and they got $25,000 to invest. Well, that's great. So you put $8,000, that's almost a 50% ROI on your money to begin with, and then the $350 in cash flow. So that's ridiculous. Your money goes through the roof then by arbitraging and private investors' money into it at that. List of IRA people. You mean people who have self-directed IRAs, Al? Gotta come to my workshop for that. I'm not gonna share that on the call. I spent a huge amount of time in the workshop talking about that. Easier than you think it is. But it takes work just reaching out to them. We actually will cover that in the virtual workshop. Okay. Trust me, that alone is worth the price of the workshop. We had a lot of people like, oh, that's brilliant. Yeah, I'll show you how to build a river of private money really fast. Okay. Any other questions about that? Who's got a deal they'd like for me to work through? Who's got a deal? All right. This is what I do. Because I've drank so much water today, I have to run to the little boys' room. I know this is funny. I know, hilarious, right? Exactly, yes. Because if I can't stay here much longer. So if you've got a deal you'd like to work through, make a little note there with what it's worth, what your payments are, and we'll work through some of these when I get back in just a second. Take a quick 5-minute break. Whew. I know, fun. Whew, sorry about that. Nature calls, right? All right, let's see who's got a deal here. Got some questions here first. Okay. Josh asked a good question here. Since we are not pooling money, do we suggest setting up an LLC with yourself, the investors are managers of? No. Your LLC can partner with that person's LLC. That's the easiest thing to do. Don't be in the same LLC. I mean, you can on special interest ones, but most of the time you're going to just be your LLC versus. Okay. All right. Linda asked a question here. Why wouldn't I want to deal with self-directed IRA investors or sophisticated investors you have to split your profits with? Are SDI investors fewer in number, harder to find? No, Linda. You're just going to, if you're dealing with investors, out looking at investors, you're going to find investors. A lot of self-directed IRA investors are looking for money, and they're more sophisticated than your traditional people out there that haven't been to things. It's all about in the negotiations. I prefer dealing with self-directed IRA investors because, hey, they've got money sitting there on the sidelines, and you can often find out exactly how much they're looking for. Okay? Okay? Okay. No, I don't use limited partnerships. Okay? All right. Yes, Bill, I do actually keep. The question is, do you set up a separate bank account for JV to keep funds for that deal separate from other assets? Yeah, you can do that. You may want to open up like a separate savings account to your account that's just focused on that one asset. Okay. Okay. So, all right, let's do this. All right, Jim's got a deal here. Okay. Toledo, Ohio, modified last year. UPB is 30. Okay. No, Warren, your LLC can be from anywhere. It doesn't mean the state it's in. No. All right, so give me a second here. Let me figure this all out. Okay. Okay, so Chicago deal, 5-bed, 2-bath. Owner Rock, CMV, it's 42K. You can buy it for 7,000. Purchase price is 7K. That's good. Okay. UPB is 142,000. Okay. What's market rent in the area, Lloyd, and what's the existing mortgage payment? $3,200 in back taxes. Rent's $800 a month. $700 is their mortgage payment. Okay. Okay, everybody just quit asking questions until we get through everything here. Hang on. And no, it's not in gangland. Okay. Okay. So we've got this one. Hang on here. Okay. All right. So on this, let's make it a little bit cleaner here. All right. So what we were about is 42,000 CMV. It's a value. You're buying at $7,000. That's awesome. Taxes of 3,200. You're probably going to have at least $1,000 in servicing. And if you have to foreclose, 3,500. Now, the nice thing is their rent, if they were to move out, their rent would be higher than the mortgage payment is. So you want to focus on that $700 a month payment. Okay. So if you get $700 a month payment, I would also ask them to bring some skin in the game. Now, on the previous examples, I didn't talk about skin in the game because usually the borrowers bring some skin in the game that's going in my pocket for working the deal out, besides cash flow. Okay. So let's figure expenses here for you, Lloyd. 3,500 foreclosure costs, 1,000 servicing, 32 in taxes. $7 grand in the actual cost. That amounts $14,700 is your investment. For somebody, right? Now, if it's worth 42, maybe you can get 21,000. That's 50%, right? That's 50% investment to value. Okay, so that's a 6,300 management fee. Miscellaneous expenses, right? Okay, so let's work through this. Now, if you can make the mod payment, 700 times 12 comes to 8,400 bucks. All right, 8,400 bucks divided by your 2,100 cost to your JV partner is a 40% ROI. Not shabby if it turns into a loan mod, 40%, right? Let's take it a different route, though. So you got to foreclose on it now. Well, 42,000. You're going to get probably 90% of that at a sale, so is equal to that times 37.8. 21,000 in your costs and your management fees. Because remember, we rolled in foreclosure costs in the 21. Okay, so that means you net 16.8. And if your JV is to split it 50-50, that's 8,400 bucks. All right, and 8,400. It's funny how it's funny how that came us exactly to it too, didn't it? Is that right? No, that can't be right. Hang on here. Oh yeah, no, that's right. It's funny. That's a 40% ROI too. The difference is on this one, a foreclosure takes a year. The other one, loan mod, starts coming cash flow coming in. So that's the way you structure it up. Now, this is assuming if you have to sell it as an asset, that it's in good condition. It's in sellable condition at 42. That doesn't include any repairs, expenses, stuff like that. Okay. So let's say you got to add $5 grand in expenses for paint and carpet for something like that. I mean, that's a pretty good size home. Let's just say your expenses you got a repair cost of 30. That's not really exciting. That's only a 13% ROI if you've got to put some money into it. You got to put $9 grand into it. At that point, you might want to cover some of the costs outside of the $6 grand that you've covered to maybe pay for some of the stuff. But that's where I think you've got a pretty easy loan mod there, because otherwise you're going to move out and have to pay a lot higher thing for rent. You may want to see if they can't make it 3 months of payments on the front end. You know what I'm saying? Does that make sense, everybody? All right, let's look at Jim's deal here. Okay, so owner occupied. So you modified it last year, okay, for 35,000. 16K BPL. 3K in taxes. 246 a month is it's the new payment. Or you modified it to 16 grand, Jim. Jimmy, there? Okay. Quit. No offense, Gene. Quit typing 4 to 3-2. All right. I don't know what you're saying. You've typed it 3 times. We're in the middle of something here, so please stop typing things outside. Oh, the original was 45. You dropped it down. Okay. So, okay. So, well, so they're making payments to you for 246 a month. So let's figure that. Okay. So 45, 246 a month. This is in Ohio, Toledo, Ohio. So most you're gonna get 29.52 out of this thing. So that's the thing to keep in mind is you don't really want to go above BPO. What'd you pay for the note, Jim? You paid 2,500. I love it. That's what the purchase price was. Okay. Plenty of flexibility there. 2,500. Gotta love Toledo, Ohio. All right. So you're trying to see how much money you can get out of this thing. Is that correct? Okay. So on something like this, let's say you got 10 grand. If you got 10 grand from an investor coming, that's still, it's not 50 cents on the dollar. It's a little bit higher, but if you've got a modified loan bringing in money, the payments is pretty decent. So, 10,000, if they want 12%, they want to make it, get at least 1,200 bucks a year out of it. All right. They're a 12% investor. Okay. So if you figured in that you're getting 29.52, all right, that would still be 17.52 to you. $146 a month. So that's what you could do. Say, hey, looking for an IRA investor who's looking to make 12% of their money, who's got 10 grand. I just wouldn't go above that too much on the lower value stuff. Let's get your money out. Let's put 7,500 bucks in your pocket. Plus, you're still going to get 17.52 a year off that deal. It's 150 bucks a month, roughly coming in, and somebody's going to get money. Plus, if they do decide to sell later on, you've got a little bit of equity at the six grand. Or if they pay down, obviously they pay down, but you're still sitting there structured wise, protecting your investor. Okay, so that's the route I would go. So let's look at your ROI for you if you were to do this. And how long have you had this deal? Last year? When did you buy it last year, Jim? So you've owned it for 3 months. You sly dog you. Okay. 2,500 is what you paid for it. And how many months, how many payments have you gotten so far? 2. Okay. You got the first month. That's awesome. So let's say 12 months. That means you're going to let 11 months of 246. Okay. Let's say you get a year before you bring in an investor's money. So if you did 11 payments times 246, it's 2,706. Is that right? Yeah, that's right. Plus you get the 7,500 back on that. That's, well, you don't have to be too good. 10,200 over your $2,500 investment is equal to that divided by that. That's a 408% ROI to you on that deal. And a funding partner, joint venture partner would be making 12% of their money at the 10 grand. The fact that I'd want to make sure this person made some payments on time, obviously. But if you got somebody that wanted to make 10% of their money or 12% of their money right now, you could do that, implement it right now. Great. And then you're splitting cash flow for a little bit, so your return goes down a little bit. Maybe it's just 146 a month you're getting. Basically, you should make no less than 300% on your money here, because if you get 7,500 in, okay, the 7,500 difference is he only paid 2,500. So if he gets somebody coming at 10 grand, 10 grand minus the 2,500, $7,500 in profit. The 10,206 is taking the 7,500 he gets above what he paid 2,500 for, plus the 11 months of cash flow. So 2,706 plus 7,500. He says, does this in 12 months from the time that he bought it. He has 1 month of workout. He's got a 408% ROI. Well, the $3,000 in taxes, that's a good question too. If you want to pay that, pay the $3 grand in taxes, but I would try to get the borrower to pay the $3 grand in back taxes. Jim, what have you discussed to do? Okay, so if he takes the $3 grand out, great. He's still at 7,206. That's still a 288% ROI. Great. Congrats, buddy. Does that make sense, everyone? Jack, why don't we speak off subject of that? Because we've got different opportunities. If your investors are looking for flat returns, secure returns, there's a ton of ways that we can do that for them. So let's speak off topic. What do you say we talk tomorrow sometime? Okay. Shoot me an email and schedule time. Cool. All right, everybody. Well, I think that's about it. We've been going for right at just over an hour 15. You love this call? Well, good thing it's recorded for you. Okay. Hopefully it was helpful for you guys. I don't want to take too much of your time up, but we've been in an hour. It's about 7:18. I'm getting hungry now. I've been in the office a long day. So feel free, if you have any questions, drop me an email. Yeah, I'm sure everybody else is getting hungry too. It's 7 o'clock there in Chicago as well. So hopefully that was helpful, everybody. Any other questions before we wrap up for the day? Hey, thanks, Johnny. Eric, you just got to work through your deals, buddy. All right, that's all you got to do. Work through your deals. All right, good. All right, glad you guys are liking it. I will send an email out with a replay as soon as it finishes going on. So maybe either tonight or tomorrow. Pat, I'll look into it and we'll go from there. So thanks, everybody. Once a reminder, if you like this kind of stuff, this is stuff we do in our workshops. We'll definitely do that on Sunday in Houston. We'll be working through joint venture deals, how to structure the aspect of it. I'm giving you guys another couple hours. We're going to sign up for the 30-day note training. Drop me an email. We'll get you added to that, or we'll send you a PayPal link for that to take care of that and get signed up with that. Okay? Otherwise, have a great evening. Thanks, Lloyd, and everybody else. Thanks for the kind words. If you like it, make sure to leave comments on the videos on Vimeo or YouTube. I'd appreciate that. Otherwise, take care, everybody, and we'll see you guys next week on the next Monday night. Bye.